What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. Today, we are looking at the SPY chart, which is a proxy of the S&P 500. We had a sell-off in the market after SPY hit its all-time high of $371 today. Not a huge sell-off, but a good enough sell-off to freak people out. If you own stocks, I wouldn't be surprised if 90% of your holdings were showing red today. Did you panic and sell your shares? Or did you buy stocks on the dip today? Let's check out the SPY charts to see whether today was the bottom of the sell-off. If you like these type of videos, make sure to subscribe to my YouTube channel right now. That way you don't miss out on more actionable videos like this one. Just click on the subscribe button below this video. Looking at today's price action, my quick thought is that the sell-off is not over yet. I hope I am wrong and the market turns around tomorrow and keeps running up. Yet when I look at the chart, it doesn't look promising. The high probability trade, at least in the short run, is some more downward pressure. Today, the market opened at the high of $370.88, which is higher than yesterday's high of $370.78. Then it proceeded to make its all-time high of $371.05, in which it got rejected and there was a flush down. Not only did it flush down, but the closing price is important here. The SPY closed at $366.85, which is lower than yesterday's range. Not only is it lower than yesterday's range, but all the gains you made in the last 3 days is gone in one day. Looking at the volume today, we see a decent amount of volume traded today where the institutions were also involved in the profit taking. Although retail investors are getting into the market and having a significant influence into the market, the big banks and hedge funds are still whales, and when whales move, you have to take notice. Now what? In my opinion, there's still more downward pressure in the market. The S&P 500 will gravitate down towards the gap that happened between November 30th and December the 1st. The likely scenario is that we're going to fill that gap and there will be support at the yellow horizontal line at 362.81. Most likely, the 20-day moving average will be around that price level, maybe slightly higher, providing more support for the market. Now, the price action on this $362.81 level is important to take note. Two simplified scenarios to consider here. If we see a sharp decline in SPY to 362 and then a bounce up, then it is a good signal and maybe a good time to buy the market. This is the buy on the dip strategy and good entry point. However, let's say that the SPY breaks 362.81 and stays below that price level for a while. If we see SPY trading below 362.81 for 30 minutes, an hour, and then closes below that price level, then this is a red flag and a concern, so watch out and do not buy into the market. Most likely, there will be more downward pressure that day or the upcoming days. I actually wouldn't be surprised if the market closed around 362.81 on a given day to give traders less clarity. But let's wait and see what happens. For those who are a bit more conservative in investing, take note of the horizontal red line at 350 and 68 cents. It happens such that this price level is close to the 50-day moving average. Coincidence? I do not think so. Investors who have been patiently waiting for a correction, you should be laser focused on this price level of $350.68. 350 is a big round number that traders tend to gravitate towards too. And not only is it a big round number, but it is also a strong support line. If this price level breaks on a 30-minute and 1 hour and closing similar to the 362 strategy stated earlier, then chances are we see more downside correction. Again, the risk of the market going down still exists. The S&P 500 has a chance to go down to this level. Look at the history. The SPY had a big run up to 357 on September the 2nd to only come back down to $321. That is a 10% correction. Then the market rebounded to 350 on October the 12th to then decline again 8% to $323 price level on October the 30th. So the next logical question you should be wondering is, what is an 8% decline from today's high of 371? An 8% decline would be around $341 price level. This is a very bearish case where we will be below all the supporting levels, below the 20-day moving average, 50-day moving average, but still above the 200-day moving average. We have a lot of barriers, obstacles, and time for this case to become real, so let's just keep it in our back pocket for now. Overall, we could see some downside pressure in the short term in the markets right now where the institutions are looking to do some profit taking. Long term, I'm still bullish as the trend is still good and expectations of more stimulus coming through from the US government. I hope this was helpful for your long-term investing in hopes to reach financial freedom. Please invest safely, subscribe to the channel, and hit that like button. I thank you, appreciate you, and see you next time.